All right, this is a very important video. In this video, I want to discuss how to determine the quality of a base. A base is nothing but a period of consolidation. Like you see here, before this breakout, there was this base. So there are different kinds of bases. See, this is one base. This is another base. So you can see the difference between this base and this base. There is a slight difference. So how do we determine what is the quality of the base? So there are 10 points which I have noted down based on my experience, which I will share with you now. I look at these 10 things inside a base that tells me whether I am looking at a high quality base or a low quality base or a medium quality base. So there are 10 factors that we should look at. I will share those 10 factors with you in this video. But before that, let's first try to understand why is it important to understand the quality of a base in the first place. See, higher the quality of the base, the more time I can give the stock to move up. So for example, if I'm coming out of a higher quality base, I might hold the stock for 2 months, 3 months, maybe more. But if I'm coming out of a lower quality base, if the stock is breaking out from a low quality base, maybe I'm happy with a 10-20% move within a week or 2 weeks. That's a shorter move. So high quality base, play for a longer move. Low quality base, play for a shorter move. This is one point. Second point is, after the stock breaks out, what happens to the price action after the breakout also is a very important determinant of whether you will stay in the stock for long or not. So for example, let's say you are coming out of a low quality base, stock breaks out, but after breakout, it creates a rising window. Okay, now in that case, you can keep the rising window as your mental stop loss and you can play it for a longer move. Okay, that was one important information I wanted to share with you. Let's get on with the quality of the base. So the first thing I look at is the number of candles in the base. So here, if you see, the base starts from here. So this is point number one. Okay. So if I start counting from here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm looking for minimum 10 candles, which is 2 weeks of consolidation. But the more the number of candles, the better is the base. Okay. So more the consolidation, more the stock is taking time to rest. And the more time it takes to rest, the better is the quality of the base. So remember this, more candles in the base means higher the quality of the base. Number two, more points in the base. So as you can see, if I draw the consolidation in this base, so this is point one, this point two, point three, point four, point five, point six. So there are 6 points in this base. That means there are 3 contractions in the base. The more the number of contractions, the more the number of points, higher is the quality of the base. Some bases have 8 points. Okay. 10 points are very rare, but some bases have 8 points, which is 4 contractions. The more the number of points, the better is the base. So if you want to see 8 points, see there is a base here. Look at this. This is point 1, point 2, point 3, point 4, point 5, point 6, point 7, point 8. Okay, so there are 8 points in this base and see the stock breaks out. Okay, very powerful, around 17% move in a single day. Very, very powerful. So remember, more points means higher the quality of the base. Then height of the base. Now, before we get into the height, if you see here, there are 11 consecutive red candles. Now, why is that so? How come if there are 8 points in the base and it's a nice breakout, how come the stock did not sustain? Why did it fail? I will explain that when you understand the further points. Okay. Point number 3 is height of the base. What is the height of the base? So if we see here, I have discussed earlier, the height of the base is measured from point 1 to point 2. So this is 28%. So this is a C grade base. Remember, I had discussed earlier, if the height of the base is around 10% or less, that's a A grade base. If the height of the base is 10 to 20%, it's a B grade base. If the height of the base is between 20 to 30%, it's a C grade base, which you see here. And if the height is 30 to 40%, it's a D grade base. And if the height is more than 40%, I'm not interested in buying the stock. Okay. So you see here, it's a C grade base. The more the height of the base, the lesser is the quality of the base. If you see here, this is a high quality base. See, from here to here, the height is very small. Again, this base is very tight range. Okay, the tighter the range, the lesser the height of the base, the higher is the quality of the base. So since this is tight, you can hold it for a longer period of time. Number 4 is the length of the base. From here till the last candle before the breakout, what is the length of the base? So the longer the length, okay, the better is the base. So let me show you one base here. This came, yeah, see, this is the breakout candle, 0.1, 0.2, 0.3, 0.4. So that's the breakout. And you see this length. So if I draw this, this is the length of the base. Okay, so the length of the base is important, the height of the base is important. The longer it is, the longer the length of the base, or more the number of candles in the base, the better is the base. The taller the base, the weaker is the base. Okay, so you need tight price action within a longer base, so that see, you can hold the stock for a longer period of time. It's very important. Next, number 5 is, are there any shakeouts in the base? So if you see this stock, this is the latest price action. See, there are shakeouts in the base. See, the base starts from here. So this low is taken out, this low is taken out, this low is taken out. So these are called as shakeouts in the base. Shakeouts are actually good because in this case, what is happening is the bigger players are kicking out the weaker players from the market. Now, when there are shakeouts in the base, you want the price to come up, trade in the upper quarter of the base. So if I draw this base, so this shaded area is the upper quarter of the base. If I divide the base into 4 equal parts. So after this, after the final shakeout, you want the price to come up, trade in the upper quarter for quite some time. And after, let's say, maybe 10 candles in this upper quarter closings, you could then play the stock for a longer move, because you have given the stock enough time, almost 3 to 4 months on a daily chart, to consolidate, and then you are making your move. So that upper quarter becomes very important whenever there are shakeouts in the base. So remember, shakeouts are a good thing. Okay, they are not a bad thing. Number 6 is volume profile. So if you look at volume in this base, so remember, step 1 is a high volume rally for any base breakout strategy. See, this is a high volume rally. See, you see volume here. This is step 1, high volume rally. Step 2 is low volume consolidation. See, this is the consolidation, low volume consolidation. And step 3 is high volume breakout. So here you have a high volume breakout. So remember, step 1, high volume rally. Step 2, low volume consolidation. Step 3, high volume breakout. So the volume should be high, low, and then again high. Okay, remember that. Number 7, there should be a mother baby candle inside the base, preferably towards the right most part of the base. So if you see this, if you see these two candles, that's a mother baby candle combination. Mother baby means the entire range of this candle between the high and the low is embedded inside the entire range of the previous candle. That's called as a mother baby candle combination. Whenever that happens, okay, there is a very high probability of a breakout. So remember that if you get a mother baby candle, you should get excited. Maybe there is a breakout likely. Number eight, price action in the top quarter. Now, if you see this stock, so the base starts from here. So if I draw the base, here, see, you see some price action in the top quarter of the base or the upper part of the base. Okay. Here you don't have many closings. Here you only have one closing, but you see there is 3-4 days of price action in the upper quarter of the base. And when that happens, you can hold the stock for a longer period of time. Have a look at this. You can hold it for a longer period of time, even if it comes down, bounces off the yellow line. Okay. So this tight price action that you see, this tight price action, which is happening in the upper quarter of the base or the upper part of the upper half of the base. Okay. The upper part of the upper half of the base. Very important. So if the price action is in lower half, then the quality of the base is not that great. Number nine, volatility in the base. You have to look at volatility in the base. So going back to that shakeout stock, see, there is too much volatility in this stock. See, large red candles. Okay, it's a big reversal candle. See, it almost looks like a shooting star. So, but high volume, high supply, the price goes up and comes down. That's not a good sign. Plus, the look at the range of the candle in this base. The range is very high. The distance between the high and the low. Most of the candles are very volatile. You don't want that. Okay, you want tight price action. So let me show you. See, look at this base. Very tight price action. Compare this base with the previous chart I showed you. Very tight price action. Not much volatility inside the base. Look how far you can hold on to the stock. And number 10 is buying volume versus selling volume. So if you look at this base, whenever there is a red candle, see, all the red bars are below the blue line. Blue line is the 50-day simple moving average of the volume. So whenever there is selling or there is red bar, the volume is below the blue line. But whenever there is buying, which is the green bar, you see the volume shoots up. Okay. Or whenever there is a red bar on selling, before that, there is a green bar which is much higher than the red bar. So the buying volume is always greater than or above average, but the selling volume is always lower than the buying volume or always below than the blue line, or most of the times it is below the volume moving average, the 50-day simple moving average of volume. So the more you see that, the higher is the quality of the base. So remember these 10 points. This is what I am looking for in the base. Number one, the more the number of candles in the base, the higher is the quality of the base. Number two, the more the number of points in the base, or the more the number of contractions in the base, the higher is the quality of the base. Number three, the taller the base, the lower is the quality of the base. The shorter the base, the higher is the quality of the base. Number four, length. The longer the base or the wider the base, let's say 1 month, 2 months, 3 months, the longer the base, the higher the quality of the base. Number five, the more the number of shakeouts in the base, the better it is. Or if there are shakeouts in the base, the higher is the quality of the base. But one important point to note here is whenever there are shakeouts, wait for the price to come up, do some price action in the upper quarter of the base, and then buy it as it comes out of the base. Okay, as it breaks 0.1 of the base. Number six, volume profile. Remember, step one is high volume rally. Step two is low volume consolidation. Step three is high volume breakout. Number seven, there should be a mother baby candle in the base. If there is a mother baby candle in the base, the higher is the probability of the breakout, higher is the quality of the base. See here, you see the mother baby candle. Number eight, look at the price action in the top quarter of the base. If there is good price action in the top quarter of the base and that price action remains below 0.1 in the base, That's a good sign. That's the higher quality base. Number 9, volatility of the base. If the candles inside the base are too volatile, there is too much range between the high and low of almost most of the candles in the base, then that's a low quality base. Okay. You need tight price action like this. And number 10, buying volume versus selling volume. The buying volume most of the time should be higher than the selling volume. Okay. And even if the selling volume is above average, there should be enough bars of enough green bars which are way above the selling volume. So these are the 10 points you look at. There is no black and white here. It's a gray area. So there is no high quality, low quality base. You have to look at 10 factors, and then you have to take a call as to what whether you want to play this for a shorter move or whether you want to play this for a longer move. Not no single base will meet all of the criteria. Say for example, this base is very high quality, very tight base, but you look at the length of the base, you look at the number of candles in the base, it's just 10, 12 candles. But what if there were 20 candles? Okay, now that becomes a very high quality base. So remember, no base will meet all 10 criteria, but if a base is meeting most of the criteria, then you can play the stock for a longer move. So I hope this video was helpful to you. I hope this will help you identify proper bases. The question is not whether you should buy or should not buy. You have to buy when you get a proper setup, when you get those 4 points, when you get those contractions. You have to buy as long as the price is in the upper half of the base, or as long as your buy point is in the upper half of the base. You have to buy. The position size you decide whether you want to take high risk, low risk, but you have to buy. But after you buy, whether you hold it for a longer term or a shorter term move, that depends on the how you are analyzing the quality of the base. So that is why this video becomes very important. So I hope this helped you. Thank you so much.